Hey, everybody. Joshua Phillips here, Churchill Mortgage, sending out another market update. Today is August the 8th. We are getting late into the summer, sending this out for the Phillips team. If you're working with myself, Amy, or Jesse, we are the Phillips team here at Churchill Mortgage, and you're in great hands if you're working with one of us. So anyway, as you can tell, I'm working remotely today. I'm actually working from a cabin outside the Smoky Mountains on a little family vacation, but I didn't want to miss the opportunity to send out a market update. Sorry, it may not look quite as nice as it typically does, but wanted to go ahead and get some information out to you because, hey, great news. Mortgage rates are doing really well. And, we're going to start out here with this article that came out just yesterday from ABC News saying the average rate on a 30-year fixed mortgage dropped to the lowest levels since April. That is great news, and really around the best levels we've seen all year. This article goes on to say, suggesting that average rate on a 30-year fixed conventional mortgage fell to about 6.63, which seems about right. And a year ago, the average rate was 6.47. So we were seeing rates last year around this time starting to fall as they hit their lowest point last September. So right before the Fed cut the Fed fund rate, I've talked a lot about that. So, 15-year rates actually are falling, in many instances below 6. And also FHA 30-year rates are falling to 6% or even below. So we are seeing some good movement, although as we talked a lot about, rates have still stayed in a fairly narrow range, maybe about a 0.5% range for the most part this year. Although right now we're at the low end of that range. So, hey, that is some great news. We'll just kind of follow this up with a little bit of detail here. So if you look at we always like to look at CNBC. I couldn't find a good article there today where I usually look at articles, but I talk a lot about the 10-year Treasury yield as a place where you can look and see. We wanted to see, I've been targeting for refinance clients. Hey, let's watch the 10-year Treasury, see if it drops below 4. Keeping in mind last year when the rates got at their best levels, the 10-year Treasury yield got down to about 3.6%. So we want to see the yield fall a little further. But it has been falling 4.28. I think we got around 4.20, 4.22. Now, a lot of this, I didn't really address yet why our mortgage rate's doing well. Well, one of the big drivers right now is the jobs report last Friday. It was a poor jobs report. Bad economic news typically tends to be good for things like treasuries and mortgage rates. I guess part of it is hoping that it will prompt the Fed to cut the Fed fund rate, although we've talked a lot about that doesn't necessarily, just because the Fed cuts the Fed fund rate does not mean the mortgage rates will go down. But whatever the case, we are seeing 10-year Treasury yields fall. Again, if you're looking to refinance, I would still try to hold out. Let's see if we can get to that 4%. 4.0 or lower on the 10-year Treasury yield. You can keep an eye on that on CNBC.com, just like I am, and that'd be a good indicator of, marrying rates are really starting to get good. Although I will say, if you're looking to refinance to a 15-year fixed, right now could already be a good enough time, as like I said, we are seeing rates get under 6% in many instances on a 15-year fixed. All right, one last chart here I'll go to. Often we'll pull up this mortgage-backed security chart. As I say every time, when you're looking at a mortgage-backed security chart, this is a Japanese candlestick chart. Feel free to chat GPT it. I'm sure it can give you some good information about this. But with a Japanese candlestick, green is good, red is bad, and the higher the security price, the better mortgage rates are doing. And I always go to this because, as a professional loan officer, in fact, I would say nearly every professional loan officer in America uses this chart right here, this website, to track just rate movements and what rates are doing. And as you can see, if we go back in the last 6 months, right here, when we kind of touched on this 102 level, we kind of came back about to that level. Now, again, we're experiencing some resistance here in the last couple of days, where mortgage rates have gotten very slightly worse as we kind of hit that peak. Recent peak here, and really like a 6-month peak. If we go back, I love to go back and look at some longer charts here. Let's look at the 1-year chart. You'll see, just for a little more perspective, okay, that's where rates got to last year in September, right before the Fed cut the Fed fund rate, we saw mortgage rates improve quite a bit. And that's where, just for some perspective, so we're definitely not back to the level we were last year at our best levels, but around the best levels we've seen it this year, and really we're about the best levels we've seen since last September. So we're kind of matching the best levels we've seen in about the last 10 months. All in all, pretty good news. It's not, rates are not just going crazy and dropping to 3 or 4%, but we'll take it. We'll take any win we can get. So listen, if you're out there looking at houses this weekend, you have questions for us, we are available to answer those questions if you want to fill out an application. And if you want to have a conversation about your specific rate and what the payments and such would be for you, we're happy to assist you with that. Anyway, have a great summer weekend and let us know how we can help. Take care. Bye-bye.